let's just start off with a little fun and show you the actual evolution of most traders, unfortunately, at this point, to give you some background information. So, of course, everyone starts as a normal person, and at some point you discover trading and everything. That's where your life kind of can make a positive switch. You discover trading, you obviously start to evolve, everything looks great, you get your feet wet and collect some experience. Perfect. You put in the work, learn some new strategies, maybe buy some courses, learn stuff, and that's where most people are at this point. And then at the 5 step, where the human actually starts to go down a little bit, is when, quote unquote, these traders nowadays all be like, oh, we trade like the big banks, we use market structure and smart money concepts. And that's technically the right way, but that's where most people start, like actually de-involving than actually involving to the positive side, because that's when they kind of switch things up a little bit. And again, then they getting into this false belief system of market structure, smart money concepts, and again, he's picking these wrong points of interest, getting losses. They don't really understand those losses, they don't really question it, they just claim it with valid loss after break of structure and stuff like that. They stop questioning at this point. That's why they're actually lowering the learning experience at this point. This is a very dangerous point we have to be very careful about. And then, unfortunately, now you see it on Instagram, social media, YouTube, wherever. What do these people then do? If they don't get the success they want, they create these quote-unquote mentorships. Everyone in their sister now has a mentorship group for $100 a month where they're teaching, quote-unquote, teaching these smart money concepts, where they create these videos about Kochs and breakout structure and smart money concepts in replay mode, putting some fancy music to it just to get views and obviously get you in the shitty mentorship, right? But again, that's not it. The proper evolution should, of course, look different. You should discover trading. You should dig into trading. You actually collect and, again, get experience the way you should be able to do it. Put in the work, learn new strategies, and that's when now the big change comes. Then actually dig into the real reasons for how the market works with liquidity inducement. Again, not smart money concepts or like supply demand, the market structure. Just think about it for a second. Market structure is the first thing every trader learns in baby pips. Everyone knows the higher low, lower low, whatever, this change of character when it makes the breakout structure. That's the first thing everyone learned in their experience. Of course, that's not how it works. Of course, that will not work on the long run. You have to actually question the strategies and how the market really works. And we will show you in this webinar. And then again, that's when you actually should be quiet, silent for a few months to discover the true market intention, what works for you, and how to actually you can make it work. And again, question everything. And then create a proper trading plan based on proven concepts you tested over the last months, not even weeks, months, and then stick to your trading plan like a robotic-like discipline and put emotions aside. Again, emotions are very dangerous. We will dig into it a little bit as well. So also, what you have to understand first, and this is probably your first essential learning lessons, period. Traders, robots, EIs, whatever it might be, they need reasons and trade confirmations to open a position. No one ever will open a random trade. Again, when do you open a trade? When you learn something, when you found a strategy, when you test it a little bit, and then, oh, it's the third touch of the trend line. Oh, it's a valid break of structure, taps into mitigations on a point of interest. You need these reasons to open a trade, of course, right? And most traders likely have similar reasons. Have you ever questioned that? Again, everyone has the same exact chart in front of them. The whole world. It's not you sitting in your living room with your fancy iPad, drawing in a fancy box or a line in the chart. No, the whole world obviously sees the same things, right? So the majority of traders, though, they can't explain why they seemingly can't make a living out of trading. Because maybe you follow the rules of your mentor, maybe you follow the rules you've learned, but for some reason, you just can't make it work and you just don't know why, right? So following what is taught and learned may not be enough to succeed because, again, very dangerous. There's a lot of wrong knowledge out there. A lot of it, right? Again, just to mention a few, retail strategies such as support resistance, trend line, supply demand, Fibonacci, volume trading. Again, there's so many stuff, even nowadays, smart money concepts, all that stuff. The problem with that stuff is that you will not been given any real reasons for how this market works. Do you actually think a $6 trillion a day market works because you drew in a trend line on your MacBook, and then a market comes back and reacts to your little trend line? Do you actually think that? Or if the zone you draw in the chart, do you think that? That's obviously not the case. They need to give you those reasons, so you'd be like, oh, that's supply demand. I know that. Oh, that should work because this and this and this. They know that. They obviously know you're going to open a trade, and that's how they engineer and actually can deliver the market how they want. And smart money concepts nowadays is just another fancy way of using market structure, which is the most basic thing, period, in combination with supply and demand. Breaker structures, Kochs, and sometimes even worse, Y-curve. Okay? And then YouTube traders and Instagram gurus may be showing ineffective strategies to just sell your dream. Have you ever thought about that? Okay, but again, before you're getting all mad and write some pretty bad comments about us just because we want to help you, no. Again, you can't just blame it on psychology or experience as well. Again, some people will be like, oh, I have to just get one more year experience of smart money traps and then I will make the breakthrough. No, it's not going to happen because you don't even question the core issue that smart money or like retail strategies are not the way to go to. And just because you see someone on Instagram driving a Lambo and then tells you that support and resistance is amazing, it's probably not going to be a good thing for you in the future, right? And experience will not change it. You can also not blame psychology. Yes, psychology is a huge reason why most traders don't succeed. But again, you can have the best psychology in the whole world. If you don't understand how the market works with the real reasons, it will not help you shit. So you have to start with actually getting the real reasons of how the market works. And yes, I know some traders may be very successful with random strategies, but again, we just give you the basis. Most of these strategies will not work for most traders. Again, I had a friend, actually, he worked for for Deutsche Bank, and he actually explained me a strategy, and I programmed it. And I discovered, hey, wait a second, that's not really a working strategy. So how can you make it for you? And this is a guy who literally, again, at this point, he wasn't that big at this point. He only made 7 figures. And I met him the first time and become friends with him. Obviously, now he's a little bit further than that also. But yeah, then he just explained me, yeah, he just doesn't literally know why it sometimes doesn't work. And that's when my moment even was like, wait a second. You don't even know why it doesn't work like 50% of the times, but he's still making 7 figures of it. Yes, you can be lucky. I'm not saying that he's lucky. But again, when we digged into his trades he didn't win, he just didn't know why. And then sometimes he just didn't catch them on actually accident and only caught the ones which are working. Maybe the same thing with you. If you trade supply, demand, whatever concepts, again, if you test them on a actually every time basis, you will notice that they only work 50% of the time. How can I know that? I programmed every strategy. Literally, I came across like years and years ago, and I have the numbers for all of that. Even the same thing for smart money. And the smart money point of interest, if you actually program it and actually look in the numbers, they were horrible. The points of interest had like a 20% accuracy, and 80% of the time it failed. And again, we have the numbers for that. It's not a secret. But again, still people feel like, oh, smart money then, yes, blah, blah, blah. No, you have to actually dig a little bit deeper, much deeper than that, okay? So then again, another proof of that is prop firms, for example. They're even stupid enough, sorry to even say, that they even show you their numbers when they say like, oh, we withdrawn traders this month 5 million, and then they even say, oh, our traders this month opened 10 million trades. Wait a second, you withdrew 5 million but your traders opened 10 million trades a month? Oh shit, that's the worst numbers you could ever do. So you had to trade like mini lots for 1 pip TP to get that done. Horrible numbers. And again, broker feeds, they're all revealing the numbers. It's not a secret. It's not a secret. But again, why is that? Because 90% of traders, or even 95% of traders, are trading the same shit. Right? Okay, maybe some are more successful than others. But again, the majority of them, they're trading the same shit. And again, traders maybe blame themselves for not following the rules properly when they experience losses, but not the strategy themselves. That's why, again, no, you have to start questioning actually what you're trading, right? And then some might believe just losses are normal, okay, without questioning, but how can you grow there? How can you ever grow if you never question your losses, ever? Okay, so answer this truthfully. Have you ever got stopped out by a few pips and then the market laughs at your face and gets in your direction afterwards? And you're forced to watch it move without you? It all starts with the understanding that the market is not hunting you down. Again, you few lot sizes, even if you open 100 lots, the market doesn't care. Right? It's not about you. Again, you have to go away from that feeling. It's not the broker hunting you down. It's not the market hunting you down, even though it might feel something like that. It is the overall strategies, traders, systems, AIs, everyone needs, and they are targeted. Okay, so let's actually get into this war and dig into these foundations, which you will keep for the rest of your trading career and give you the basis of how you actually can understand the markets a little bit better. So the key components of the market. So you see this beautiful heart in here, we can call it the heart of the market. And you see there's a lot of functions in it. Again, if you think about it, it just can't be like a heart pumping blood. No, there has to be some components in it which actually drive the price, the market of how we know it, and has multiple components into it. The first one, and the most obvious one, is of course the money aspect to it. And that is the true heart of the market. Everything, of course, is around money. Everyone wants to create it, everyone wants to be rich, everyone gets technically into trading to become rich. Again, if you're being truly honest to yourself, that is the reason why you trade, right? The real reason why they can manipulate you as well, again, as they attach money to what? Emotions, all these things that come with emotions, they use it highly against you. And the thing people don't understand though, these people who control these markets, again, we will not dig into this comparison theorist and whatever stuff. No, we won't do that. But again, just know that the market is definitely controlled at a degree. And again, these people, just again, to name out a few, for example, the Federal Reserve, these are people, they creating the money. They don't need money. They press a button to create money. So do you think they need money? No, they create it. They have unlimited amounts of money. They even showed in the last year when they literally printed trillions of dollars the last few years. I think at this point, over 40% of the dollar amount that is in existence right now was printed in the last 2 years. Just like that. They can create it out of nothing. You need money, you need to work, you need to actually get money to survive, to buy luxury things. They don't need that. They're independent of all of that. So you have to start with that thinking. They don't do what they do for money. They have the money. They do what they do for control and for you to actually get stuck in the system. The next thing, obvious one, is fundamental analysis. People need reasons of, maybe this unpredictable news events, NFP, FOMC, all that stuff, or maybe even the numbers. People look at the numbers, arbitraging it, Euro USD against the US 30 or dollar index, blah, blah, blah. Economy reasons, this economy does bad, so I have to short it, blah, blah. No, literally not. Again, how can you think, if you actually think about news events? Actually, let me see if my pen works here. Let me see if you can see that pen. Oh, shit. How was it back? How did it work actually? Shit. Let's see. Oh, there you go. So let's actually see if the news events, right? Here's the news coming in. And now the news event, whatever, is positive, whatever. The numbers of NFP is super fucking good, right? Again, the logical thing, maybe at this pair, whatever it might be, would be price would rising if the numbers are good. So how can it be that the moment in the news event, the news makes this? How? If the numbers are good, why in the hell did they go low first? To stop out all buyers and then go buy based on the news event. How can that be? Did you ever question it, even just for a speckle? Again, news is not what drives price. It's literally not. And now I don't even know how to close that drawing thing. Can you maybe help me out here? How can I? Oh, thank you. Right, so again, start questioning these things. Another thing, technical analysis. Again, retail strategy, smart money concepts, indicators, all this stuff, Ikimoku cloud, everything like that, that lines into the technical analyst. Again, everyone sees the same chart. Everyone needs these confirmations. People will not open trades. Systems will not open trades without confirmations. You need whatever strategy you might need or trade. Again, if you're a trend trader, oh, let me wait for the third touch of the trend and after break of structure. If you're a smart money trader, oh, let me wait for the break of structure into imbalance, into mitigation. That's your reason why you open a trade. You don't question anything else. You just have these reasons and think you can become a billionaire just by following that. No, dig deeper. Again, you need to know why people take a trade and risk their hard-earned money in the markets. Again, they will not just randomly open a trade, is it? Right. The next thing you have to understand is the psychology aspect, and this is things that are getting a little bit tricky because this is the illogical aspect of trading, where FOMO, revenge trading, everyone experienced that. And guess what? They can enforce that with price action. They know exactly when you will be very happy and excited and feel FOMO to fear a setup. They know how to trigger that with price action. If they create a huge candle in line with the trend of a breakdown, they know people get FOMO. The same thing when they know when they pull back the market on you that you will chicken out of your position and close the trade prematurely. They know that because humans are generally very bad traders, and emotions and thoughts, they work against you. They have literally zero benefits in trading. So again, this also will be fully different for every trader individually, and it's very hard to generalize, but just understand this as well. Now things get a little bit more exciting because this is where the rabbit hole starts to open a little bit. The syndicates. Syndicates are companies, whatever we call them, like even corporations, we call them institutions, whatever you want. And these companies have all the data. That means they obviously see exactly where the positions are in the markets. Again, it would be fugazi if you don't think that is not the case. They know exactly when people open trades, what's the balance or the ratio of buyers and sellers, where putting people their stop losses, where putting people their TPs, when do they pull break even. They see that all. They have all this information. You don't. You have to learn to see that with your bare eyes. But again, they have all this information. It's not a secret that these numbers are there. They have to be there. Right? So they know all these things. And now the architects come in place. We talked a little bit about it earlier. Again, that's people we can't really give a name to. We don't really know who they are. They exist. It's not a question. It's not a conspiracy. We will not dig into that. Right? But again, these are people. They know all these things. Again, these are people with the unlimited amount of money. They not only create the money with the press of a button, they also created or create price action only for the purpose of control. Again, for them, it's not about money. They have the money. They are the money. And they know more than we could ever imagine. Right? And this is the part where the normal Joe, the normal person, would put on the tinfoil hat and scream like, no, this is not true. I will not believe that. And this is where you're literally going to be stuck forever if you don't want to realize that. Again, there's no benefit for you if you deny that. Where's the benefit? Again, for them, it's just about power and control. They don't need money. They just want to control the way people behave. They want what people do and all that stuff, right? So you have to understand that truthfully without even thinking about conspiracy. No, this is the way the market is and the way you have to understand it. And now the most important aspect about it all, and this is the enigma, or how we call it, the enigma. And that is the machine behind it all. And we will dig into it in this webinar even. And this is the AI. Again, they created this AI. We will dig into it years and decades ago, right? And this is actually the AI which delivers, quote unquote, delivers price action the way you see it, the way everyone in this world sees the price action on a daily basis, on a minutely basis, on a month. Every time the price moves, it's actually delivered by an AI. And it knows this. Again, this enigma obviously has all these numbers we covered before. It has all the fundamental reasons, that all this technical analysis. It knows exactly what makes people excited, feeling FOMO, feeling fear. There's all the numbers of the data. And of course, they have founded these things with unlimited resources as well. And they can obviously use the enigma to create, and that's the most important point now, to create liquidity for themselves, for big banks, big institutions, we call them the big boy club. Again, if they open positions in the market, they need a shit lot of capital. How do they get it? Again, the market is nothing else than buyers and sellers. If there's no sellers and you want to open 5 million lots, you can't. You can't. You need other people that take the opposite side of your position. And of course, that's how they use Enigma, that again, they give the rest of the world all the reasons they need to buy so they can sell. It's easy as that. Literally easy as that. Again, think about it to maybe a better understanding. You probably all experienced this crypto hype. All these little pump and dump schemes, they called it, right? When they actually, quote unquote, induced people into buying, oh, buy this coin, buy that coin. But guess what it was? The big players, they all bought these coins literally months ago. And then when the retailer knows about the coin, they've been used for what? Special award prize for the winner who can answer this question. They've been used for exit liquidity. Pump, the big institution pump it, then they reveal it to the public is stupid enough to buy it, and then obviously the big boys, they sell it off to the public, and then price can drop. Everyone loses money other than the big boys. And that's literally, in a nutshell, of what happens on a minutely basis in the market. It's literally that easy. If the moment you understand that, that is when everything is about to change. So, let's dig into it. So what technically is the Enigma? To understand what the Enigma is, we have to understand the basics of how the market works. So, again, there are market participants that trade incredible amounts of money, like BlackRock, for example, Vanguard, like you can call out a few more institutions if you really want to. Fidelity is one of the big ones as well, which again, they manage over 20 trillion US dollar, just these four corporations alone, right? So, but obviously, there are much more banks, institutions, corporations, all of that. Again, but just these four alone, they manage 20 trillion US dollars alone, right? Again, that's for a normal person, you can't even imagine that numbers. And we just call these big players, we just call them big boys club for argument's sake, okay? So these institutions can't trade like us. Their orders are much too big in order to just open a position. Again, it's this quote unquote fair exchange, they call it. They have a super nice quote to say about it. The market is a fair exchange of money of the competent to the incompetent. So when someone wants to sell or buy, they need a seller. If someone wants to buy, they need a seller. If someone wants to sell, they need a buyer. So guess where these billions every day come from to book a profit for the big boys club? Guess where it comes from? And here's a special surprise. It is not you. The market is not hunting you down. Again, we talked about it earlier. Your 10 lots, your 50 lots, your 100 lots, they will not make a big difference to them. They have to create these billions in order to target the overall strategies the way you learned it, the way you've seen it, the way you experienced it, the way you've got it taught, aka these retail strategies and smart money concepts, which make the rest of the world buy and sell. In addition to that, they create emotions like FOMO, fear, of course, to add on top of that fire. Again, when 90% of the world is buying, they sell. When 90% of the world is selling, they buy. How else do you think the official broker statements claim? And again, 90% of traders lose their capital. They're all trading the same reasons. Again, as we said, they call it a fair exchange of the competent and incompetent. Crazy. If you dig deeper into it. So again, we talked about it. When do you, banks, smaller banks, hedge funds, everyone who's not part of their club, when do they trade? Again, they need reasons. They need technical analysis, they need retail strategies, they need indicators, they need fundamental analysis, they wait for the news, they trade smart money concepts. Again, and they will give you very happily all these reasons. They know exactly when you buy, when you sell, where your stop loss is, where you take profit is, when you pull break even, when you chicken out, when you close too early, when you close too late. They know all of that. And they will give you that reasons, right? So here's the twist. They have to keep the wheel spinning though. They obviously want you to come back and trade it. Again, if smart money traders will get stopped out every day, all the time. They will not trade it. If trend lines would always get smoked every single time the moment they show, no one would trade it. If an indicator never provides a proper trade, a winning trade, nobody would use it. So of course, at some point they have to throw people the bones and they have to show how it works. That's why you see double tops. Yes, they lead to a big reaction sometimes. Yes, a smart money point of interest will lead to a 1 to 10 at some point, for sure. It has to be like that. Again, they have to give you the illusion that it works. But again, now think deeply. Why is 90% of traders using them, losing them? Why? If it apparently works so good, it's hindsight trading. It's not how it works, right? So Enigma is very good at delivering price action exactly to make them win enough to keep them coming back, keep them in the game. Maybe you remember and imagine this quote of the Wolf of Wall Street when they actually sit at the dinner table and Hannah explains Jordan Belfort, they have to keep the wheel spinning. That's literally exactly how they do it. They have to keep them in the game by providing them some profit at some point, but not too much that they actually can make a great living out of it. That's the same for limit too. You have most likely heard about, again, ChatGPT, one of the craziest rising things, and already experienced the power of AI at this point. So now imagine that ChatGPT was developed by OpenAI literally only a few years ago by a few developers under strict limitations as a trained language model and only has data for a few years, only up to 2021. And you see how crazy that shit is. Now a funny thing. There's also an AI called Aladdin, and Aladdin is an AI-driven platform that was developed by BlackRock. BlackRock, one of the most craziest companies, or whatever you want to call it, institutions there is. They literally own almost everything. In the early 2000s, so about 23 years ago, they created Aladdin. And it's now used to manage an estimated amount between 10 and 20 trillion dollars. And that's an AI-driven platform. What do you think that thing does? Right? So and now think about it way deeper than that. Again, BlackRock is an actual normal institution. But Enigma was developed way, way before that and with unlimited funds. And they don't have to follow rules. Again, that's created by the people who don't give a fuck. They have no rules. They created them. They are the rulers. Again, they don't need money. They need power. They need control. And that's why they create the Enigma of obviously deliver the markets the way they want to deliver it, of how to control and obviously empower themselves and obviously take the power from everyone else. And that's obviously how they deliver the daily markets with a volume of an estimated 5 trillion US dollars every single day. It has to be like that. Nothing in the market can be ever random. They can't leave it up to chance. They obviously control it. And that's how they actually engineered and developed Enigma over the last decades. And look how freaking amazing they did it. So to give you a simple explanation, Enigma is the AI that drives or delivers price action on a 24/5 basis in Forex. Enigma has all the insights about the fundamental analysis and technical analysis, and has all the hard numbers of liquidity, of current liquidity in the market, limits, stop losses, take profits, all of that. And Enigma knows exactly what price action to quote unquote show to bring in buy liquidity or sell liquidity, to stop people out, to make them excited, to kick in the FOMO. They know all that stuff, how to enforce that to you. Okay. And again, the unfortunate thing for you, these concepts, they've been all used against you. So your strategy creates liquidity for them so they can take the other side of your trade. The objectives are pretty easy. It's create liquidity, trap people, early reversal sellers, induce them to give them the last push to jump in, and then repeat the whole process over and over again. And if you don't know about these 4 essential objects, you literally will be trapped in this liquidity cycle forever. And that's literally a promise. An easy way to compare it, again, look, for example, BlackRock and Vanguard. Just those 2 corporations alone. They literally own majority shares of all the major brands you could think of. Just those 2 companies, right? And now think about food, for example. majority of customer brands, how you know it, you go in a supermarket and you think, oh, let me buy a variety of food. No, you're literally buying from 10 companies. That's it. Same thing with retail strategies. You think, oh, I'm trading a variety of retail strategies and combined with smart money concepts and market structure. No, it's one thing. It's the enigma giving you that reasons. It's very easy if you think about it. It's actually very easy. You just have to escape this. And again, our most stolen quote to this point is probably, again, we brought that in years ago, is if you can't identify the liquidity, you are the liquidity. And nowadays, especially with smart money concepts, because there's so many people out there that try to explain you that exact thing and show you smart money, this and that. No, it's crazy. Again, we brought that in, what is it, 3 years to this point? And how is it that not even anyone is like close to understanding? Why does no one else show you intraday mastery other than us? Isn't that strange? Right? So actually, let's dig into some more theory and then we actually dig into charts because you understand it better. So let's look at this little illustration here so we actually get it into your brain deeply. Okay? So the easiest trick in the book to create liquidity for the big boy club is this, for example. Imagine the big boys bought positions right down there. Okay? So this cloud in here represents their open positions. Okay? Their open positions obviously don't do shit. They obviously have to close their positions to get actually money for themselves. Right? So when they want to book a profit for their buys, they need someone taking the other side of their position as they want to sell off the buys. And if they obviously want to close the buys in profit, they need the other buyer to take it. It's easier than that, right? So they have to create buy liquidity so the rest of the world, aka retail strategies, buy off their positions. Again, think about these pump and dump schemes we talked about earlier. Okay, just a quick side question. Everything clear so far with the enigma? Makes sense? Just give me a quick heads up if everything is good there, because it's very important everyone understands that. I'm gonna have to sip a quick water here as well. Brain exploded. Okay. Very good. I see some very good aha moments there. And we will go deeper than that, don't worry. Okay, so now think about it this. Again, they open all these, again, think about it as a crypto thing. So they bought these little shit coin down there, and that's all the money they want to liquidate for themselves. Okay? So obviously to be like, okay, let's buy here. At some point, obviously, the price actually starts to develop. Okay, perfect. But at this point, I hope you see my mouse, by the way. I thought I'm just making weird moves here, but I think you can. So at some point, obviously, they want to liquidate actually their positions and actually make money themselves. Again, that's the institutions they're using enigma, right? So at some point, oh, people coming in, and that's what they're seeing. Oh, it's a little trend forming already. That means buyers come in. And these buyers obviously taking the buys from the big boys. So perfect. They actually can close a few buys and put it in their bank account, like visually speaking, right? Perfect. So they create a few buyers. Perfect. They got a few reasons, a little transforming, break and retest, blah, blah, blah. They can close off a few buys. Perfect. Boom. What happens? Huge momentum, speed, everyone's getting excited, breaker traders coming in, momentum traders coming in, FOMO kicks in, more buyers enter. Boom. They can actually liquidate a few more buys and be happy that other people bought off their positions. Amazing, right? At some point, of course, they will mess around, show like a triple top, show like this little pullback, lower lows, to fake like a potential reversal. Again, because resistance and lower lows, all that stuff. And again, they bring in sellers. But what's the other point they also do? If sellers enter, they're putting their stop losses where? Above here. And when they getting stopped out, obviously they become buyers. If you close your sell in a loss, you become a buyer, right? So again, this creates more buyers for them to get liquidated. Oh, interesting. So the moment this happens, and you've probably seen this like hundreds of times, boom, sellers are getting stopped out and buyers actually getting in because, yeah, it's a breakout, right? It's a breakout. It's a continuation. And that's how they're creating even more liquidity. And boom, just like that, they liquidated even more positions of them. Perfect, right? But it doesn't end here. It doesn't end here. Look how much money they still have left in the cloud. They want to still get more money done, right? So guess what they do? Break and retest. Oh, some more buyers enter in here. Break and retest. Perfect. Continuation. Woohoo. Obviously, buyers add in, they can scale out. Boom. And slowly and surely, they can liquidate these people. And now, obviously, danger comes in. Just moving the chart here, so we have a little bit more room here. So what's the next thing's going to happen? Boom. Breakout, Koch, they want to call it, change of character, break of structure. First of all, this stops out late buyers here, right? But again, they don't want to stop out buyers. They want to bring in more buyers, technically, right? And stop out sellers to become buyers. First of all, they do this. No buyers come in here, right? But obviously, they look to the left in here. Oh, what is this also? What is this also? Oh, another whatever support turns into resistance or whatever, all that stuff, or resistance turns into support, blah, 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 break and retest. And then, of course, boom, touches back, even comes back in this zone. Of course, more buyers open here as well. But again, other smart, quote unquote, smart money traders, what do they see? Oh, we are so smart. Smart money here, imbalance here, oh, break of structure here. They're getting a reaction of the zone, which we call smart money trap. And that brings in smart money sellers. And this is the last push, the last move they have to do to bring in all the premature sellers to stop them out and to finally liquidate out of all their positions. Because what is about to happen? Boom. Smart money traders getting stopped out as well, and they're all becoming buyers. And on the other side, again, we have another continuation, another breakout, all that stuff. So everyone now is buying, and all the sellers, they are stopped out. What a surprise. What a surprise, right? Oh, but again, they have to have one little money left they want to liquidate. So what's about to happen? First, right, if every seller's getting stopped out, there's no more reasons for anyone to sell. Again, the latest reasons were the smart money traps. They got the little fake reaction. They got stopped out. No more sellers. So what's about to happen, right? First, the big boys come into play and be like, oh, look at all the money we liquidated. Let's actually reverse the whole thing. And now we can close finally all our buys down there. We made our pump and dump work successfully. We found a lot of weirdos who actually bought off our buyers. Also by bought off, I mean, again, selling and then getting stopped out. You're forcefully getting to a buyer, right? And there, yeah, perfect. Let's actually open our big sells up in here. Boom, market pulls back. Last break and retest in here for the buyers. That's when the last buyers come in and they finally liquidated all of their buy positions just like that. And that's when I look at them, the happy big boys with the big piles of money, the big bags of money, right? They transferred all their buys into actually forms of actually money. Again, at first it was open positions. Now they closed everything because people bought it off from them. And now they're ready to do the same thing again. Big boys sell, sells in here, repeat the whole process. First, move the money into your bank, open all the other positions, and let other people sell or buy it off of you because they need the reason. So boom, breakout, people selling, Koch, people having the sell direction, brings in sellers, buys, stops out buyers, which become sellers, so they can liquidate their first monies again. And they repeat this process, break and retest, sellers come in, more people can sell off, and they can give more people the sells. And that's the never-ending cycle of, quote-unquote, the market is a fair exchange of money from the incompetent to the competent. And the moment you understand this truthfully, this is how everything can change in your future trading career. And this is technically everything you will ever need.